All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for March 7th, 2024. Oh, sorry about that. Not sure what that was. All right, so let's start with Alcoa on the 30-minute charts. So here was yesterday's trade, the peak of the RL10, yesterday's close. Here's the gap up. It was above the peak. And when it moved a risk box off the bottom, I put the hybrid frog on it, standard risk. And it closed here for about plus 3R. And I'm going to hold that one overnight. I want to just take a moment and say, I've been studying this for a while now. This is called the anchored vwap. What you've seen me using before is the intraday vwap. Like, for instance, today, this is the vwap line, the volume weighted average price. And that is the weighted average of every share that was traded today at the price it was traded at. So it actually marks off ground truth for what the fair market value was at any given time. This is the 5-day in this dark red line. That is the 5-day volume weighted average price. It's anchored to 5 days ago. Actually, I'm sorry, that's 6 days. It should be anchored to here. And then it gives you what the 5-day is. And then this one gives you the 10-day. And that kind of represents the fair market values for people that are oriented over longer look back periods, so more like the swing traders. And so one of the things that you notice is after a gap up and going, it's pulling away from both of those. So it feels like there's room for that to run. If this were to fall over, however, maybe break through our support level, then those become price targets. That's the reversion to the mean trade, but using the VWAP as the magnet. So now what I've added on all the charts, you'll see that the 5-day is this red line and the 10-day is this other orange line. And those could act as support and resistance or price targets that are a combination of price, volume, and time. So on the Patreon page, there's an essay that describes the ideas behind the anchored VWAP and shows a couple examples, but there's a couple tonight, like on Microsoft, where it becomes pretty clear how useful that can be in helping us make up our minds. Okay, so anyway, plus 3 on Alcoa. AI. So here's one just as another example where it's pulling away from the 5 after it couldn't go any further above the 5-day and the 10-day. And then when it breaks through, the next target is back to the 10-day and then a certain distance down. And now we could see this as a recovery move back to the 10-day VWAP, where it's just kind of holding. Now, if this were to break down tomorrow, then we can say that that would be new selling pressure, taking it away from fair value. But if it breaks out above this, then we would see those two price levels as targets, tactical targets to the upside, and then a breakout above 35.50, which, oh, by the way, corresponds with this. That would be a significant breakout above 35.50, going all the way to the peak of the RL10. So that's just a way that we can start thinking about those two indicators. No trade today in AI. Caterpillar, it broke out above the previous RL10. It ran all the way up and I managed to scratch for 0. It closed pretty well, so that has some room to run tomorrow, but today there was just no follow through. So I'm not going to chase. Like if it doesn't persuade me early, it's a lot of times I'm just done with it for the day. All right, this is Cliff. Here was yesterday's close. Here was today's open. It breaks through the 10-day anchored VWAP, the 5-day. When it breaks above both of those, I put a standard risk box on it below the 10-day, and off it goes. It peaks right here. So I take the edge of the dragon exit for just slightly under 2R. This held support right where you would expect it to hold support. So that's really, when it doesn't break out any further and starts rolling back, that's kind of an indication that it's probably done. Don't try too hard. CVS, no trade. Diamonds, no trade, too choppy. Disney, I missed the morning's move away from, I saw it was pulling away. I thought about it here. I didn't take it. That's tradable. I shouldn't lose money on that trade. And if I get the 1, 2, 3 entry here, I shouldn't lose money on that trade on the return to the 10-day. And then maybe tomorrow, if we see a breakout above like 110.50, in my view, it's going to 112. So that's the move for tomorrow. And then if you look at the standard risk box, that'd be about what the risk is. That's reasonable trade intraday. And then if it breaks through that, then our next target would be here around 114, which is another couple R. So there's room on this for that kind of move. Now, if it breaks below 109.50, then there's no support anywhere in here until we get all the way back here to 107.50, which means that with that same risk box, I now have 2 to the downside. So Disney should be a prime target for you tomorrow because you got 2 and then another 2 to the upside and 2 to the downside on a measurable risk where it held support all day. And it's right at the 10-day fair value. So that would be a move away from the mean and a move away from the mean. So that's like a fence sitter, to use the sniper language. Check or hold. Devon Energy was a clear break above the 2 resistance levels, above yesterday's VWAP, above the 5-day and 10-day VWAPs. So that genuinely is pulling away, and off it goes. That's all new buying pressure. Here's where it peaks. So I just take the exit at the skin of the dragon for 1.5. Just trying to make contact. Emerging markets. Now this is interesting. This gap, you'll notice, was brand new buying pressure. This big gap right here was pulling away from the 5 and the 10-day. Now notice that those hardly budged. So there's not a lot of volume on this. So this is still speculative. But when it broke above the previous peak right here of the dragon, I was ready to speculate in with the standard risk and to take my little 1R when it started to stall. I would not be surprised to see this fail all the way back to 40 .40 tomorrow. So if we see that PSAR break, then the move is down to 40.40. And if that doesn't work, then the move is all the way back to 40. Why? Because that's how far they were able to pull it away from the 10 period the last time before it reversed. So that's how much power they have as traders. That's also approximately the size of this move and the size of that move to recover. And it's also approximately the size of this move. So about 50 cents is how much power they have to move it during the day for defining our expectations. Okay. ETHE, I'm scratching my head on why I didn't exit this, but there it is. So we get a continuation move and then a breakout to the upside. So I speculate in. It closes pretty well. So on 1 unit of risk, I've got about a 3R buffer. That sounds like a lot, but it's not really a lot in ETHE. But we're going to see. This has been nothing but good. It's pulling away from the weighted averages, and it feels like there's a steady buying pressure on this thing at every chance to buy it they have. So I'm going to speculate on that one. So 3R. Mexico. Tried the break. I was front running the breakout above the VWAP here. But it didn't go anywhere and scratched. I thought about the short, didn't take it. It would have paid. But this is really a fence sitter, and I can play a breakout, a refined breakout now, using that as sort of the noise space. It's already below that. So if this fails below today's low, I'm instantly short because there's no support in here at all. And the next target is down here. It has to get through both of those to be really persuasive, but I could see getting a 1, 2, 3 entry and trying to front run that tomorrow. So we'll see. EWW is a frog champion. So that one is in play as an intraday target tomorrow. It's ideally postured. Brazil, that's as sideways quiet channel as you could ever want. And it's right along that 5-day VWAP. And here's the breakout. It has to get through here. That would be a second position. And if it breaks below here, it's short. And if it breaks below here, that's a second position. EWZ is sleepy and compressed, therefore ready to break out when we startle it awake tomorrow. We'll see. No trade in China. Intel, continuation to the upside on the gap up, about 2R, standard exit. IP, standard caught a 2 entry, scratched, never didn't go anywhere. IYR, no trade. Coca-Cola, I tried the 1, 2, 3 entry long, took a half an hour loss. KRE, this thing rolled over early, flowed into it for an R, get out before the close. McDonald's, this was just 1, 2, 3 and everything bad from those declining highs, and it broke through the PSAR. It was getting ready to front run or getting ready to cross the 10-day. So I got short here with a standard risk above the high of the day for sure. And that's also the standard risk. So that's good. And this thing did this and then continued. I thought really hard about this to hold, but I just decided, you know what? I'll take 2.5. It's very near that support level, which is where it turned last time. And there was strong buying right there. So I just decided to cash 2.5. I don't like to bet against Warren Buffett. I will, but I don't like to. MRK. So this is one where notice the power of those anchored VWAPs now. So you got this nice tight cluster. That's how strong away they could pull it. And then you get a 1, 2, and now it has rejoined this. So this little kata 2, which is a low, a higher low, and an uptick, and it crossed the dragon, and it's above the Bollinger Band mean. That feels like the lowest risk idea ever. So yeah, it's only 1R, but that feels like the lowest 1R that you could ever get. And then tomorrow, if it breaks above 124.50, it feels like a move to 126, which is a full percent. Feels like that could really go. And if you look at the size of the risk box compared to the size of the possible move, you realize you got a 3-to-1 on that breakout, maybe even 4-to-1. So I like that one on the long side. And then on the short side, if this breaks, now it's pulling away from both of those longer term plays, and it feels like the short term sellers would be in charge. So I love that as a short at 123.50. And then my first target is this 5-day low. And so if it breaks through today's low and then the 5-day low, then it's really heading south. So this one feels like a superstar setup, ready to go hard in either direction. Target, target. Microsoft, here's another. This is as classic a tale of the VWAP, the anchored VWAPs as you can get. Here's how far they could push it. So when you get a kata 2 entry crossing the Bollinger Band mean, there's your target. And that's a, that's the kata 2 entry with a tight risk box. That's 1, 2, 3, 3R. That's the lowest risk 3R that you could get. Now, if I use the same logic to say, if it continues tomorrow, how far could it go? Well, I already see how far away they can take it. So that's how far they could take it up. And that's how far this absolute price level is. So what is it? 416 is in play tomorrow. So if I can get long at 410, then there's $6 to the upside. I could have as much as a $3 stop and still have 2-to-1. So if it broke out from 410, I could have a stop at, the PSAR dot, which is just below the intraday VWAP. That just works magically. That's how much you should have a $3 stop in Microsoft tomorrow. Check or hold. Marijuana, this is the number one intraday trader by trading value metric that we have. So here was yesterday's sell off and exit. Or no, that's the one. I'm sorry, that's the trade we missed. That's the one we took and we didn't get the reentry. That's right. So I got short here when it continued south. It rebounded, so I scratched. It rolled over and went, so I got short again, same risk box. And this one sold off to here. And I was content with 2. And we'll see what that does tomorrow. And I'm going to be mindful that tomorrow, if it breaks above the PSAR, if it breaks above the intraday high, no matter where I get an entry in this region, no matter where my entry is, my targets are 1, 2, 3, 4, 5. Oh, that's the 30-day anchored VWAP. That's how far this thing is pulled away from long-term fair value. 920 all the way down to 760. So that's what, $1.60 on 7.5. That's a 20% sell-off. So if this thing starts climbing the ladder tomorrow, those are the targets all the way back to the 30-day volume weighted average price. That's how far away they have been able to send this thing in 10 days. 10 days ago, it was at the 10-day fair value. And now the 10-day fair value is here. And so in 5 days, they were able to move it that much further down to the bottom. So when this thing recovers, it's going to go. And that's what your price targets on the upside are. At 770, it's starting to run out of downside targets. So there we are. I can't help it that I missed this one, except I could be a better trader. But, what are you going to do? Still not sure how I missed that. Nike, no trade. Now, here's one that I actually really like for tomorrow. So this, look at this. Everybody agreed that is the fair price around 105. That's the 10-day and the 5-day VWAP, and all of the other things are clustered in here. What could possibly go wrong? Oh, it could move all the way down to 97, which is -7. It's from 105 to 97. That's -$8 on 105. That's about a 7.8% sell-off. Okay, so if it's stabilized here, you would think if it's still weak, you'd expected it to have continued south. It did not. It gave a little SSC entry, and then it didn't go anywhere. But the important thing is it didn't fail any further. So that's the one day, the first day out of the last 6, that it hasn't failed. Maybe the buying or the selling program is over. I don't know that. But if it breaks above 98.50, and if you used a full day's risk, you have 2R to 100, 2R to 102, 7R to the 5-day high. And you could get short here if it fails tomorrow. But the asymmetrical reward is to the upside. Check or hold. Let me know in chat if you found that helpful. NVIDIA. Emerging Dragon continuation. It just went to the upside. 1, 2, 3, 4R in hand. So why not? It had every chance today. It had every chance from this exaggerated price level above the Bollinger Band mean, above the 5-day and 10-day VWAP. It had every chance to fail today. It did not. There was more buying pressure, and the Bollinger Band got steeper up. So that's what I'm going to hold. If it breaks below today's low, then those are your targets to the downside. But man, that's easy to believe in on the upside. Clean energy. I tried to front run the crossing of the VWAP. So, this is the middle of the chop, right? I tried that, it failed. I tried that, it regained. Pretty much a scratch for the day, and it just stayed right around here. So that's a fence sitter that remains sitting on the fence. That's me trading in the middle of the chop. So there's nothing there. Jay asks, how does the 30-day VWAP compare to the RL30 and the RL270? Well, you tell me. Look at the chart and what do you see? If you go out to the 30-day, I have to do it on SPY, excuse me. I'm going to draw it in solid blue. So you tell me, how do they compare? Let's compare it. How do you think I'm going to answer that? Well, here's the start point and there's the end point of the 30-day volume weighted average price. That shows continuous buying pressure on SPY. This is in SPY. Now, compared to the Bollinger Band mean, they happen to be co-located here. They were not co-located back there. So that's not a one-to-one correspondence, but you can see that price that guys are willing to pay a premium above the 30-day volume weighted average price. The 10 period has been pretty strong, but stable. So all of these excursions here away from that are pulling away from what the swing traders consider to be fair value. The 5 days a little bit higher, so there has been an increase in buying pressure in the last 5 days compared to 10 days and steady optimism over the last 30 days. Now compare the 30 period moving regression line to the 30 period VWAP. This is pure price. This is price times volume. So when you see price pulling away from the VWAP, that is a sign of optimistic buying, which is a bullish thing. And so as long as I have a stop along the PSAR, I'm protected against the full pain and suffering of a reversion to the mean. And since my price today is at 514, I think your stop ought to be at the 5-day VWAP in order to protect a reversion to the mean. Because now I'm giving up that much to protect against 3 times the sell-off. So you can use all of those indicators to help you construct a narrative of the psychology of the market and make decisions about where to array your reward and risk choices. It's not a question of which one is a better. They're measuring different things. The moving 10 and 30 regression lines are discounting volume. They're looking at pure price action. So that's a measurement of optimism. The anchored VWAP is an indication of the state of psychology of everybody that has that 30 period time horizon. So those guys are optimistic to this level based, the slope of that line. That's how and the optimism is getting stronger. These guys, that slope is flat. That slope is flat. So it tells you the short-term traders are more likely to take their profits than to let them run. which tells you that you should be careful that this might be the end of a 30-day swing period. But we already knew that based on the z-score of the slope of the regression lines. But this is part of the market mosaic. So that's how I would answer your question. More on that is in the essay that's on Patreon. Treasuries held up fairly well today, which you would also expect if the market was going to turn. Then guys are still willing to buy it well above the 5 and 10 day time periods. So that's good. Anchored back to the 5. All right. Tesla, no trade. I like that it's holding, and here's a chance to look at the return to the 5-day and the 10-day, but also the 30-day. This feels like strong support. So I'm ready to buy any breakout above 180 with 1, 2, and 3 as price targets. This was when both of them were in agreement that that was the aggressive price level at 200, and it sold off all the way to 174, which is minus 13%. So Tesla is on a 13% sale. And here's your price ladder on the way up for reasonable price targets. So you can manage that. Walmart, this is one where I'm concerned now. We've had this nice pull away. And then today's VWAP was here. A declining VWAP means that there was volume in the selling pressure that took it down to here and flattened out the Bollinger Band mean. So if it fails here, look how far away the 5 and 10-day VWAPs are. That's the targets for tomorrow if it fails below today's low. I will have a negative bias tomorrow if Walmart falls below here. If it breaks above here, I'm long and strong. So there's I could take half of that as my risk box. My risk box, my 3-minute risk box is 11 cents. The R-stat is $1.12. So you could have a 30-cent risk box or a 25% risk box and manage that one nicely. Because watch, if you got short at 60.35 and put your risk box here, that's 3.5 to here, and it's 2 to here. That's perfect. And then if it breaks out above 60.75, you can't be afraid to buy Walmart when it's free and clear. So there's your perfect zero state in Walmart at the end of a nice run. And if this one breaks, getting to this level is simply the next excursion past the 10 period VWAP. Piece of cake. Very tradable. US Steel, no trade. XLI, no trade. Sniper trade of the day. So this is in CLF. 3-minute charts. Yesterday's close. Big gap up. Here's the OR3. Here's the breakout in the next bar above the OR3, so I'm long. There's my standard R10 risk. I'll get short if it breaks below there because there's 1, 2, there's 2 to 1 if this thing fails. But meanwhile, I'm just going to be long. And if this is 1 unit of reward, how many more circles to the upside could there be? 9. So that would be half a range stat to here. That's not an abnormal move. Exit in the usual space, preserving about 1.5 R, 2 R. Kata 2 reentry, standard exit when it fails to follow through. Kata 2 reentry when it finds support above. Finds support above the VWAP, crosses the dragon. Now at this level, I've only moved 4 risk boxes off the low of the day. So there's still 6 more to the upside. So that still is well within the reasonable reward to risk ratio, check or hold. And I've got my support level anchored to the VWAP. And if that fails, I could get short there. Half an hour gain and done for the day. One, two, 2.5, 3, 3.5. CLF. Trading in the chop, as he notes. Trading in the chop. Find the movers. Here's a mover. Big gap up, which fails. So I can be short here with that as my risk box. And then you decide where you want to take the exit, here or here. There wasn't much, but there's something, maybe a half an hour. This is Jonathan. OR3 takes it long, gets a nice big run up. I like preserving the gain. It sells all the way off down here. When that crosses back above the VWAP and above your exit, I'd be really tempted right here. Patience. It holds at the VWAP. Look how nice and strong that VWAP is all day. So we could get here or here. This is still pretty good. Risk right there. Gets paid. 1.5. What's wrong with that? Nothing. It holds above the PSAR, well above the VWAP. When this reverses, perfect. Gets paid another little piece. All of that contributes to 1.5. And done. Done. 90 minutes. So my aggressive trader. Now, when this gaps down to here, sells off and makes this reversal. So you've got a 1, 2, 3. So the purest entry that you could get would be at the crossing of the VWAP and the 1, 2, 3 entry, which is also, see where the R10 peaks and reverses back up. You would then say, look, this price level right here at the edge of the dragon, if I had been short from in here because everything's failing, if I had been short and then I see the R10 peak, the price that gets me out of the short is that one. That price gets me out of the short. And then I could draw my risk box to the low of the day or the bottom of the RL10 or whatever my standard risk was in this thing. I could take that as 1R for execution. I could get my little entry right here. Which is a micro improvement over it. That's still a very good entry. That's a good entry. Now, this thing runs up, it rolls over, it comes to the, it now comes to the, it starts rolling. Now notice peak, peak, declining. This is supposed to go. So maybe here or here as an improvement over that. I don't mind the exit you took. It wasn't a full R loss, but we can start respecting the VWAP a little, which then says maybe I could then, when this reverses 1, 2, 3, or R10 crosses that's the RLXD. And then if my stop is here, how soon can I move it up to below the VWAP to protect? So if I use that as my 1R, 1 execution R, and then I use kind of the VWAP as my trailing stop, now pretty soon I'm running up all the way through here. And I could ride this one until this line gets broken. Just a thought. The only problem is that this is MCHI, which is China. And I'm not really seeing China move as much as the other symbols are. So I'm not sure that's the best intraday mover, to be honest. On the other hand, it is a very big fat index, and so it doesn't have shocking intra-bar moves, and that's sort of certain advantage. It allows you to zoom in pretty close like this. Pfizer, on the other hand, is a liquid mover. This is yesterday's low. To the penny. I would say I would count this as a 1, 2, 3, or here by the same logic of the trailing Bollinger or the trailing dragon, right? Because let's suppose let's suppose that I get short right here, like I could or should. Why could I or should I? Because there's your OR3, and here's a breaking of the PSAR and the Bollinger Band mean. And so I could put a risk box like this. I could get short right there. So if I were short on that trade, and then it hits the low, yesterday's low of the day, the price that get, and then the R10 peaks at the bottom right there, I run up to the declining skin of the dragon, and that becomes my exit on the short that is now done. Well, that also equals a 1, 2, 3 entry on the long side. So I could go to this low of the day and I could establish that as my execution risk, right? And I could still, even if I'm not short, I can still analyze it as if I were short. That's the turning point to begin to think about the long side. So there's my stop all day. And now I get this. Here's the first place the R10 peaks. Therefore, if I'm thinking about my short, maybe it started off as a PSAR trail. And then as soon as the R10 peaks, instead of my stop being here, I can run it up to here, the southern skin of the northern skin of the dragon, and now I'm out here. And now my trade mathematically was from here to here. So I capture this much goodness against that much risk. And that looks like about 1-ish, approximately 1. Now, instead of getting long here and short there, I can now be tilting this thing in my favor a little bit. Is there a trade here? There might be. You have the argument in favor of that is you had a strong move down to the low of the day. You had half a move back. So this is halfway back up the stack. And this little thing rolled over fast. Did not stay north. It did not stay north of the VWAP very long. So in the battle between the bears and the bulls, the bears are a little bit stronger. So if you take that mindset, you could get short here at the PSAR flip below the VWAP, where they stop to the top of the top of the PSAR, and then there's your directional bias guide as the VWAP. So you could track that along here, and then somewhere in here, you might just say, it had 30 minutes to fail, but it did not. So maybe when it reverses, I just get out here for that much gain against that much risk. That's about 0.5. This one is a entry into the fall, and this one is a rejection of the winter. So your MACD histogram's helping you there. Um, OR3, caught a 2 or emerging dragon. Good job cutting it short. We might have, when this held and we got that rise, and we might have thought of this as an entry long. We might have thought of that as an entry short, which probably gets cut off pretty quick. Wasn't much there. George got what was available, I think. The reversal, that last reversal, probably would not have made much money or lost much money. Would have made some. This is a little late getting in here. This thing, I think, could be getting long. Here's the 4 o'clock hour. So here's the open, and it takes right off. Yeah, I could live with that. And then that is your stop. This thing rolled over right away, comes below the VWAP. If that's your trigger and that's where you got filled, so be it. I think you might even have gotten short here, though, instead of here, based on that read. Then this is a little better for you. Short here or short here, and then exit at the skin of the dragon. Possible. -1. I like the long from here. Stop. It gets short. It found you today. That's just all we can say. Today was the day it found you. This is a case where your risk box for 1R, there's no technical exit here, I think. I mean, there's no reason why that should be getting you out. Other than just saying, hey, that's my standard 1R. So that's not actually a price signal, it's just a money management signal. My thought is it really should be down here. Or if there's no price action in there, you gotta maybe drop down a time frame or widen your stop. And so which means you got a smaller position, which is fine. All right, let's go to heck. The 150-day look back, we're pushing all new all-time high today. Could Biden say anything tonight to make that move? I can't listen to him speak because it feels like elder abuse. I can't listen to that clown and everybody that puts him up there. The 30-day, all good. 30-minute, all good, all-time high. And I would just say, the intraday VWAP was all aggressive buying that finished here. Price closed above the VWAP, well above the low of the day. Here's the 5-day VWAP. Here's the 10-day. That's all good. That's all optimism. And it was a new high today, above the previous 30-day high. Up we go. We'll see how the market responds to his language. Tomorrow will be a fireworks day in the market. Market direction neutral for me, with a bias towards exiting positions for over the weekend. Bullish normal, wildly overbought, favorable volatility, risk on because it just went above the zero line. Bullish strong. Holy smokes. Can't believe I'm saying it, but that's what the numbers say. Come on, mouse. In the Dow, new breakout in Devon Energy and NVIDIA. Phew. NVIDIA all the way. Never look back. Still cheap. Meanwhile, 5-day down in Apple, 5-day down in Home Depot. Auto framers on Chevron and Disney, Coke, Merck, especially, Tesla, especially, and United Health. Now, 6.7 and 4-1, that's a nice rebound. So those are both high priorities for trading tomorrow, United Health and Tesla. They're both postured very well for strong moves either direction. All the ETFs just love this stuff. They can't get enough of it. All the globals are catching up. Looks good. 10-1 on Nike on the auto framer. Oh. Some significant squeezes today. Nike, mid caps, the Russell, and Caterpillar. Still dominated by the summer, mostly just joy, hardly any pain today. Notice all the winners continuing to win. Marijuana, Tesla, clean energy, Devon and NVIDIA, Intel. Yep, all-time high, grinding higher. Doesn't change the warning. Still weak. This was the first little bit of recovery, so this could lead it higher. But that looks like the end of the raging optimism. This, everybody that was a longer term professional trader has put their money back in to work, I think. That's what that is. And now we're going to see who's the greater fool. How much dumb money can get in. We'll see. What drives it higher is a short squeeze. If we start seeing a lot of short positions on the pros, that could lead to some short-term bounces. That's not impossible. So we shall see. Tomorrow is going to be fireworks, a pure tactical trading day tomorrow. pure tactical trade. There is no way I'm holding swing trades or intraday trades overnight and over the weekend. Core positions, sure, long and strong, love it, but not the shorter term ones. Leave that to the younger fellas. All right, take good care. We shall see you tomorrow.